3 things I learned from selling a business. Now, this is for the 95% of normal companies in terms of valuation, selling business, buying business that I learned. I'm not like tech companies that can be valued at 100 times revenue because they're growing 100% a year and they have no cost of goods. This is for normal business like dry cleaners, restaurant, trucking company, warehouse, anything you would see like on your way to work that is a functioning business. This is what I'm primarily focused on here. So the first thing I learned is that it makes way more sense for the right company to buy you than you think. So as any business scales, it gets a higher valuation to EBITDA ratio. If let's say a tire company that goes B2B that makes $3 million a year is worth 3 times, but then a tire sales company that goes B2B that maybe is making $200 million a year will be valued at 10 times EBITDA. So if you are the larger company, every $1 million of EBITDA that you make is worth $10 million of valuation. And if you're the smaller company, every $1 million of EBITDA that you make is worth $3 million. So this means that the larger company can acquire the smaller company for the 3 times EBITDA rate. So they buy your $1 million of EBITDA a year for $3 million, and then they put it in theirs, and that $3 million that they paid for it is now worth $10 million. So from the acquisition of the company, they gained $7 million of value from the purchase. So this is why I think finding the right buyer is so important, because the right buyer will have significantly more incentive to purchase you based upon the value that they get out of it. So if you're a tire sales company and you are trying to get acquired by a truck manufacturer, that might be less valuable than trying to get acquired by another larger tire sales company, the way that that company is valued to the market. Now, this is something where you can do your own research to try to find a company that fits your company to purchase it the best, but there's also options out there like using a broker to help you find the right company to acquire you. Second thing I learned is that everything that you're going to go through in this process, or every way that you want to present yourself, is as if you were trying to get a big loan from a bank, because it's all from the bank's point of view. And this is primarily because any company that is going to purchase your company is going to use a bank to finance the deal 9 times out of 10. This kind of comes into where everyone else gives the advice of give yourself a year to prepare, 2 years to prepare. It's because you almost have to prepare for the diligence. Because for us, there was like 50 different checklist items that we had to provide for the diligence, because, you know, the bank is extremely risk adverse. They want it to be as clean as possible. So you have to make it as clean as possible. Super clean financials, reviewed financials from an accounting firm, or even audited financials, multiple years of tax returns for proof. You're going to want to give yourself that time to prepare, or just make sure that your books are incredibly in check and that you have reviewed financials, audited financials on deck, and just having all this stuff super ready to go, because the bank doesn't want to take a risk. So the less risky you look, the better it is. A printed out PDF of QuickBooks financials and bank statements is not going to be enough to get anything done. So a third thing I learned in this process is actually that buying a business is significantly more feasible with less money than I thought would be possible. And the reason for this is because the bank will finance it. So for example, let's say you have no money or little money and you're looking to purchase and finance a company. Now, different businesses are valued differently on different EBITDA multiples, but let's say we stick with this tire company, and this B2B tire sales company is making $2 million a year of revenue. They're making $1 million a year of EBITDA, and the bank in this case might say, hey, for this particular line of business, we're willing to loan you 3 times the amount of their EBITDA to finance the debt, giving you a debt to EBITDA ratio of 3 to 1. So now you can go back to the seller. You have $3 million essentially that you can work with upon commencement of the sale, you will get from the bank, and offer them anywhere between 1.5 to 3 million, or offer them 1.5 and then pay them out over time. That could potentially default the debt to EBITDA ratio, but there's obviously ways to get it done. But you could go to them and say, hey, I can give you $2 million for, let's say, this business that you're just trying to get off your hands. And then you would have $1 million of working capital on top of this business that you just purchased for $2 million. It makes $1 million a year in EBITDA. So that's how you could purchase a company without spending your own money. You could purchase a company worth $3 million or $6 million and not have more than, $1 million or $500,000 in your bank account, or even less than that, essentially. So if the bank thinks it's a good idea and you can sell yourself as someone who would be the right person to run it, here's what I would do: put a business plan. It is extremely feasible when you're smaller. When we were at our size and even coming up, I did not think it was going to be possible at all to do something like this, but from going through the process and seeing the steps, it's significantly less daunting, and certainly something that is more possible than I thought. So yeah, those were 3 really big things that I learned that I did not know before going through this process. 2 years ago, I would have known none of this. I think it would be extremely helpful information to know. It's maybe not the best time to purchase companies, but in the future, the structure of how it works is still very good to know. So if you found any of this interesting or useful, like and subscribe, leave a comment, and anything else you're interested in knowing, just leave a comment. And thanks so much for listening.